This is a lot of money that's kind of just sitting with consumers, and I'm wondering how you get them to come to you, an online banking forum.
Absolutely. Thank you so much for having me on the show today. So for us, we are one of the largest digital banking platforms in the country. We are also one of the first neo fintech banks to go public in 2021 and one of the first de-SPACs of 2021. And really, we were well positioned for this year for growth, really because of some of the stats that you had shared, where there's been a tremendous acceleration in technology and in the use of digital banking. And so as we've seen the savings rate skyrocket, we did see a dip in consumer spending earlier in 2020, which did rebound. And we saw these trends in our own portfolio. For our new business vertical, for example, we saw 400% plus year over year growth in deposits in our portfolio. We've seen 200% year over year growth in consumer spending. And we're seeing this trend sort of continue into 2021 with a lot of consumer optimism garnered by the stimulus, by the change in administration, the rollout of the vaccination, et cetera. We've actually seen the average size of each transaction of spending increase year over year in January by about 20%. So the personal balance sheet of Americans is definitely improving as we're seeing the savings rate skyrocket.
Lovely. Just out of curiosity, good morning, it's Guy. The SPAC's in the rearview mirror. How did it go? Would you have done anything differently? Did it work out in the way that you'd hoped? Obviously, we've seen a huge surge since then. I'm just really kind of curious as to what the experience was like.
Yeah, it was a tremendous experience. I thought it was a great way for us to separate ourselves from our parent company, Customers Bank, and to be able to become, as I said, one of the first neo-banking fintechs in the country. And the SPAC vehicle really allowed us to do this in an efficient manner, to be able to ride alongside a PIPE and an anchor investor. And you'll see in the market many following suit. So soon after we closed on January 4th, we had SoFi announce that they will be going public with a SPAC. We had MoneyLion, and we really view our business model as very similar to these neo-challenger banks. And so we're proud that we were the first of many to come this year.
On that, but specifically in your industry, do you see a lot of competition out there? Like, what's the hurdle? What's the barrier for entry here?
Yeah, we're definitely seeing the word fintech and the excitement around it, definitely become more and more front and center. You're seeing it sort of as the flavor of the month. You're seeing digital banking accelerate through COVID and the pandemic. Our differentiation is that we've really built a digital bank through a B2B2C or banking as a service. Which this allows us to do is to acquire bank customers at very high volumes and at low cost. So today we're acquiring a bank customer at less than $10. And a traditional bank is acquiring a customer at $300 to $1,500. And to be able to subsidize that cost, they're charging Americans, $34 billion a year in just overdraft fees. And that is a model we don't believe in. Because we've been able to lower our CAC or our customer acquisition costs, we are able to give Americans a more affordable, transparent, and consumer-friendly banking experience.
What is the average age of your customer, and what do they think about alternative payments? We're spending a lot of time talking about Bitcoin at the moment, maybe as a store of value, but potentially as a payment method as well.
Yeah, for sure. Where our average age is about 27. We have a beautiful business where we touch 1 in every 3 college-bound students through relationships that we've built with 725 campuses across the country. They really look to us as a differentiator in the space to be able to help them, with managing their money, building their credit, setting up themselves for savings. And then we work with really great brands. So we have partnered with T-Mobile to launch T-Mobile Money. People bleed magenta. They're probably one of the few wireless carriers that people are actually passionate about. And so we've built tremendous growth in that portfolio. We most recently launched and announced that we will be partnering with Google to launch a Bank Mobile Googleplex account to our student demographic. When you have the brand equity of those sorts of brands, you definitely have the momentum to gain a lot of customers that want to to bank with brands that they have an emotional connection with as well.
I was also really interested in how it breaks down diversity-wise. You said that 1/3 of your customers are single mothers, and about 2/3 are minorities. What kind of products may be different for them than a traditional banking system that you can provide? And what are you thinking about then as you move forward?
Yeah, so for us, it's about affordability. So it's crazy to me, again, as I said, that large banks are paying their customers 1 to 5 bips on, on a checking and a savings account in this environment. We're making sure that our cost infrastructure is in place where today on our T-Mobile Money account, we're offering 4% on balances up to $3,000 and 1% thereafter. And we're able to afford that to be able to pass on to our customers. We're looking at how do we help them manage their money, to create savings goals, to be able to set that aside, make sure they don't touch it and reach those goals. We are able to provide incentives to our students who have good grades that are showing good financial behavior and reward them with discount and cashback rewards for really demonstrating solid financial behavior. We're looking at offering credit building education and tools and rolling out a full suite of credit products in 2021 to really help our demographic, to be able to bloom and foster.